Well, good afternoon. Welcome. Very excited to have our Originations webinar. We'll give everyone just about 15 more seconds. We have a full hour today, so we will make the most of it. Please make sure you are commenting and sharing your questions. And also, if you enjoy it, please tell your friends about us. Invite those to our next webinar. Just a few more seconds and then we'll get started. A few announcements before we begin. At the end of today's session, we will send out a one-pager with today's details. So take notes, be engaged, but rest assured what we share, we will send out. Also, our next webinar will be on July 23rd with our capital raising team. So please mark your calendars. You will not want to miss it. And then lastly, share your questions. Your questions and feedback gives us ideas for comments and future webinars. Well, we're going to go ahead and get started today. And again, welcome to the 3 essentials every borrower or broker should understand before submitting a loan. I'm Jason, and today we'll cover 5 things. I'll give you a little bit of my background, what I do for the company. Also tell you a little bit about central lending, and then we'll get into the heart of our discussion today, which is our 3 essentials. We want you to come away with something of value. We'll wrap up, and then we'll answer your questions. So a little bit about me. I enjoy lending. I've done it for a long time. I enjoy helping borrowers solve a challenge. I also enjoy helping them meet a goal, either getting the capital to buy a property or paying off their loan. I enjoy both so much. I also enjoy helping our teammates here, training new teammates. I am the Originations Training Lead. So when a new hire comes on board, I help them understand our process. I also have an open call every day. So I don't know if we have any brokers. Any brokers out there? Any loan brokers? Wave your hand or put a view in the chat. The loan brokers are being quiet. But if you are a loan broker or you think you'd like to be a loan broker, every day at 1:30 Eastern, I open up my time for 90 minutes to answer any questions that you all could have. But I enjoy lending. If you were to wake me up in the middle of the night and say, Jason, we need a loan, it's an emergency, I would brush my teeth, sit at my computer, and help you with your loan. Thank you, Stephen. Good to see you, Stephen. I'm glad you made it today. I can share the link with you all. I can send that out as well. Martin, I'll send that to you. And then lastly, about me, I live in North Carolina, and it is just the best. My family and I, my beautiful wife, Maribel, our sweet daughter, Eden, and our German Shepherd, Tally. If anyone's a German Shepherd owner, you will get it. German Shepherds are they're great. We enjoy things here. We enjoy cheering on the Tar Heels. We have so much fun. But I'm excited to be here today. A little bit about the company now. Central Lending has been around almost 10 years. This is our 10th year as a company. Really, over the last few years, we ramped up our hard money lending process, and I think that's pretty cool. You're going to hear a couple things today about what makes central lending different when choosing a lender, a lot of great capital sources. But we have been in the borrower's shoes. We continue to do deals actively, building new homes in Central Florida. But we started as a company doing fix and flips and realized there was really a need for reliable private capital. Since being a company, we've done over 2,000 loans, not perfect, but over 2,000 loans. You start to see some trends and some patterns, which we'll discuss today. Over 400 million paid, and almost all of it paid back. Almost all of it. Now we give good loans, and we work with borrowers that pay them back. Right now, we're very proud of this. We have over $119 million worth of loans, almost 550 of them. So when you sign up, when you get a loan with Central Lending, it is not sign the line and be on your way. No, you get a loan with Central Lending because you need a partner. So we have a servicing team that'll walk you through it, from loan funding to loan payoff. You see our key products on there. We have an investor rehab, or you might know it as a fix and flip loan. We also have bridge loans. So those are a short-term loan, holding onto a property just for a short while so you can buy a new property and then quickly pay it back. You might need some short-term capital as well. Ground up construction. So those are our new builds. And then our DSCR loans. And we're really proud of the DSCR loans. We've put a lot of effort into those, especially this year, where we can fund them ourselves, have a lot of control, and again, help you through the life cycle of your loan, from when you buy it to you fix it, and then refinance it as a stabilized property. So we're very excited about our DSCR progress. Where do we operate? I'll get questions from brokers or borrowers, and they say, my normal lender, they don't like this county that I'm in, or they don't like this part of my state. If your deal is in a yellow state, Central Lending will do it. If your deal is in a blue state, doesn't mean that it's a bad deal. It's just not a loan for us. So we're very concentrated on the East Coast, the Southeast, a little bit of the Midwest, a little bit in Washington and Hawaii. But anywhere you see yellow, that's where we can help out. But if it's in the state, we'll do it. Rural, not rural, population that is over a certain amount, population that is under, we're happy to help. So what are these 3 essentials? We hope you do all your loans with us, and we do these with all of our loans. But even if you don't, even if you go to your friendly private lender or the large national lender, what are the absolute 3 things that you should know? Well, first, the lender would want to know who you are, who the borrower is. And as long as I've been in lending, the character of the borrower is very important. When times are good, will you treat your lender, your partner, with respect? When times are tough, will you work with the borrower? We want to know that up front, and we can document that certain ways, but there's also a certain element where we interact with our borrowers. We use lots of technology. We use AI and everything that makes the deal go quicker, more affordably, but we still want to get to know you. So what is it that we are looking for as a lender? Cash is a big one. You've heard in lending, cash is king. I've seen us do a lot of loans. I've seen a few people have a slower payment. They get a little tight on funds. But the people who have slow payments, or the project's just not what they thought it would be, the root cause is never they had too much money. Because if they did, they'd figure out a way and pay off the loan. So I've never had a negative borrower feedback saying, Jason, I had too much money for this loan. No, it's always, do you have enough funds for this loan? And if your funds get tight, especially after you close, it can cause issues. We do have a formula, and it's a good formula you see here. The big thing is we want to know is, could you pay back your loan? Now, obviously, we want it to pay back with the success of your deal. We want you to sell it or we want you to refinance it at a great price. That's why we do the due diligence. But if it does not go as planned, do you have extra? So you'll see for our purchases, the down payment plus the closing costs, as well as 10% of your loan amount. And even if you refinance it, we want to know that you still have money to pay for your closing cost and pay for that loan. Something that's a little bit unique about these loans, we are an asset-based lender. So we take a very conservative approach that you might not make one more dollar on this loan until it sells or refinances. That's conservative. You know, you have to live and afford food and gas and living expenses. But we say, what happens if no more money came into your bank account? How could you handle this deal? And we hope the borrowers would take the same approach. So that's why for us, having a clear liquidity formula and also having a good understanding. Remember I showed you we've closed over 2,000 loans. We have gotten some pretty clear indications of how much money someone's going to need to successfully complete a real estate purchase. Be upfront. Sometimes people think in lending, it's a don't ask, don't tell. If I say too much. The good news about private lending is there's very few instances where it's an outright decline. I worked in the bank, as I showed you up front, and banks are tough. They have a lower cost of capital. They're using somebody's checking account. So it's very important that that loan gets paid back. So the person's checking account can be made whole. Private lending is a little different. It's a little bit higher of a cost of capital. Our funding sources kind of anticipate deals being a little bit trickier. So there's very few instances where we flat out decline loans. It's always the loan that fits your borrowing profile is exactly what we'll do. And I can say with full confidence, we are 1,000% in funding exactly what someone's borrowing profile is. But the key is, as you see at the top, be upfront. Many times our account executives will call you right away if they don't already have a relationship with you. But if they've meet you for the first time, they're going to call you right away and understand your deal. They want to know about credit issues. Credit is not the full story, but it's a good part of the story. So we want, in your words, what happened, why did it happen, and why it will never happen again. Central lending doesn't have a credit minimum. So that's key as well. We just want to know the full story. Partners and structure. Who is a part of this deal? You could have a team of one. It wasn't with this company, but another one. The borrowing team was called the Dirty Dozen LLC. If anybody knows what that is 13 people. So if you thought a team of 13 was what was required for your loan, we could help. But the key is we need to know, what does everybody bring to the picture? Why are they on the deal in the first place? If everyone has a meaningful contribution and everyone's inputting and profiting accordingly, that's great. What we want to be watchful for, that does happen in our industry, is people are trying to hide partnerships. Someone's really in charge of the deal, but they might bring in somebody with better credit. And they say, don't look at me, look at this person with great credit. It might be new. We want to know what everybody's doing in the deal. And again, be upfront with us. When we ask you to tell us about your team and your experience, that should come right out. Deal structures do change. They do change. We would hope that people are aware of what their credit scores are, but sometimes there's a little bit of variability. We would hope that people have a good idea of their valuation, but that can change as well. We'll get into a little bit of this, but we really want the research, especially on your values, to come from you. Realtor opinions are great. Wholesaler opinions are great. Any wholesalers or realtors on this call right now? Well, if you don't have a good realtor and a good wholesaler on your team, you need one. because they are out in the field finding good deals. But you, the person who is with this deal, we want you to know exactly what your value should be. And sometimes those change. So some of those you can control, some of those you can't. But we want flexibility and understanding to stick with the deal. But Central Lending as a funding team, we fund 1,000% what your true borrowing profile is, which we'll continue to uncover. So we're going to break this down into entity and personal data. Central Lending is a business purpose lender. We don't give personal loans for personal vehicles or the house you live in. There's many good lenders that will help you with that. We give you loans for business purposes for investment real estate. And to further emphasize that, all the loans are given in the name of a business. So how do we know that the business is valid? You see 5 items right there, and that covers most of it. Sometimes we request other minor items, but that proves to us for the organization who's a part of the deal. Is it recognized in the state that you operate in? Also, that operating agreement. So we already asked you up front who's on your team and who does what for your organization, but that operating agreement confirms it. We need an EIN letter. We need a signing consent. Sometimes teams will ask me, we have 3 people on board, only 2 really need to sign. We can ask, but we really want everyone signing. We know that everybody wants to sign. If they're putting their credit and their capital at stake, we want everyone to sign. But part of that signing consent is that we're fully aware of who is a part of the deal. And a good mailing address as well. We want to be able to know that this is a valid entity. What about personal data? So there might be some stories you've heard about private lending. Private lending might be a little bit easier. They don't care as much about credit. Central Lending does care about credit. That is the clearest indicator of how a borrower has handled prior loan commitments. Now, also remember what I said, we don't have a credit minimum. So we will award loans for people with 800 credit score. We'll award loans for people with 500 credit score. The big thing for us is we want to know any sort of missed payments or any prior, any accounts that were not honored as agreed upon. Why did it happen? And it's just a simple explanation. And if you like Central Lending and you want to try us for multiple transactions, you disclose it one time and that's it. We have many borrowers where they call or even send a text to their account executive. They give us a contract and that's it. They don't have to give a whole bunch of documentation. They already gave it to us once. We need a valid ID. Where I see that coming into play is we will get requests for foreign nationals. We have very successful foreign borrowers. If you live overseas, you can sign in your local embassy with your local identification. If you live in the United States, we need to know that you are living with a federal documented ID. So think green card, think work permit, something that is not expired and federally issued. Experience. We're going to treat a file differently for someone who has done their first. Also somebody who's done their 100th deal. This is their day job. Let's say I had an ambition to start flipping properties myself. Well, I'm helping you guys right now. I'm here talking to all of you about lending. So I don't have time to both work here and do that. So I'm gonna have to work nights and weekends to either fix the property myself, place tenants myself, or share a little bit of my profit and hire somebody to do that. So that is all part of it. But if I've done that many times, and part of my story, what I shared up front, is that I've been a lender for a long time and I've flipped houses for a long time and I've been able to make both work. We just want to know that. Liquidity is important to us. We document liquidity with your 2 most recent months' bank statements. And sometimes I'll get the question, how much do I need to show? The answer is, how much do you have? That's how much you should show. And I get it. People, especially if they're a business owner or a professional real estate investor, it's always a race to figure out what's my liquidity, where is every dollar best spent. And we want to honor that. We have very competitive leverages, very competitive fees. But if we ask for your liquidity, how much do you have? It's a simple answer. It's a number. I have $1. I have $10,000. I have $100,000. And then we can clearly back that up. We put that in our application, but that's part of the story as well. Is can you afford this deal? The next thing we want to know is, does your deal work? So I just told you 10 minutes about the characteristics of successful investors, both their entity and themselves personally. But in private money, we also want to know, is the deal successful? It is possible that we would decline one deal for an investor because it's not profitable and approve another one. Same investor, same profile. What's really important right here is this viability ratio. Another area where we have very reliable historic trends is if our borrowers are profitable. If they make money when they sell their property, or their cash out refinance amount is enough that they can pay their first bridge loan with us and have a little bit of extra money as well, there's a good chance they're going to pay us. When we evaluate these loans initially, we call it our viability ratio, which is the after repair value, or their ARV, divided by their total cost. So what do you mean by that, Jason? Somebody put in the chat, what's a typical purchase price of a deal in your market? We're going to make this interactive here. What is a cost of a home purchase? Thank you, Martin. $350,000. I'm going to look at Martin's next loan extra. And Martin, for that same $350,000 house, how much do you think it would cost to fix it? What is a reasonable budget to fix a $350,000 house? I see Latoya too. What would you pay to fix a $350,000 house? Would you pay $10? Would you pay $50? Let's do $50,000. Okay. Shalene says 200,000. That's a nice renovation. You might be putting a pool in. Yeah, I think Martin's right. 60,000. A house that's worth 350 to buy, you spend another 60, you're probably putting a new roof on, maybe a new HVAC unit, some painting and flooring. But what's key to us is what happens after you do all that. You've spent $410. This is just on the property. We haven't gotten into our lender fees, although they're competitive. We still have a fee. We have to pay for our servicing team. We have to pay for the investors who give us this money. So not counting all their costs, and you have to do the same with the title company. Title companies are great, but they don't work for free. So how much money would you need to make, Martin, after having spent $350,000 and $60,000? Would $410, would that be enough to break even? Just call it a learning experience? No, in our eyes, we think you can learn real estate through a webinar like this or a YouTube video. We think once you get to on-the-job deals, on-the-job training deals, we want you to make a profit as well. So in the case of this loan, one like Martin's, where they buy a property for $350,000. Yeah, I think you're right. Minimum of $500,000. I call that, is the juice worth the squeeze? 350 to buy, 60,000 to fix. We're all into the deal for 410. And if I divide 500,000 by 410, ooh, that's close. So even with a $500,000 paycheck, Martin, which is not bad, that would come out to 1.21. We'd want it just a little bit higher. We'd want to see if it's a fix and flip, maybe 525. Yeah, that would do it, 525. Because again, the beginning is exciting. The beginning is exciting. Everyone is ready to see what's going on with their deal, but you have to actually do the deal. If you're doing the work yourself, you're working on a property, if you're hiring someone, you have to manage that person. A typical flip takes about 100 work hours. Not precise, but about 100 work hours. So if you compound your time value, what your time is worth, how much do you need to be compensated for spending 100 extra hours of your life? And if you have a day job, that's 100 nights and weekends. I would double my pay rate if I was doing nights and weekends. We want to know that the deal is viable or makes a profit. Many, many loans have been paid off at central lending because the investor was successful. And many repeat borrowers have come back to us to do more deals because they were successful. Fix and flip loan is 1.25 and a ground up is 1.3. Building a home, it takes a little bit more. There's a little bit more involved, so we bump that up ever so slightly. But we would hope this is coming from the borrower. This is not just a lender enforced rule. Let's talk about the deal data. So we need a purchase contract that shows us that we have a live deal. We also want to see the rehab budget. I think this is the most important document of the dozen or so you hand in. Honestly, I think it's kind of fun. That's how you know I enjoy lending. But seeing people's budgets, they have an idea of what the best version of this house looks like. What do they think it's going to be? Is it a new floor? Is it a new kitchen? They also say, what is the cost of that? So this budget is just very, very important. I think people who have done deals over time, they just have a sixth sense on it. But for somebody who's brand new, you'd want to walk the property. You want to have a trusted contractor be with you to say, what will each item cost? And in that rehab budget, you have to expect that you're working on it line by line. So you work on the kitchen for a while, you work on the bathroom, but what's the cost for each? And we use that data to give you your values. We use a property valuation. We use a third party called Richer Values for most of our loans, not all, but most of them. And we're going to have them on later on in the year. They're great. They do a great job of looking at what you're buying the property for today, what you're going to do to it, what it'll be worth. Title work is initiated. That is your choice. There's a lot of great title providers out there. Same with the hazard insurance. All these things, we don't want you to look at them as just another lender requirement. This is your investment. You stand to gain or lose the most with the success of this property. So you want to make sure that the title is clear. You want to make sure that the insurance will protect you. You'd say it's impossible for anything to happen to this property, but as a lender, we see a lot of things happen. So do you have enough insurance to cover any loss? Great story from the borrower who never became one. He asked me right before we were about to put in an application. He said, Jason, is anybody going to tell me if this is not a good deal? And I respected the question. It turns out we did, because the valuation came back, not the way he saw it. We saw different values, different comps than he saw as well. I don't know if he was using a realtor or somebody who would stand to make a commission on this, but we were honest with him. And he respected our honest feedback. He decided not to do the deal. But we helped an investor make a wise choice as well. What is your exit strategy? All great business ventures have an end. Have you ever thought of that? Any career you started, but you'll move on one day. The same is true with your real estate deal. And in the case of a fix and flip, it's actually quite close. We offer 6-month loans. So some of our investors are signing up for a loan that they will interact with us at least 6 times to make their payment, and then that's it. So the big thing is the top section. What is your realistic ARV? Do you know the market? Have you driven through that neighborhood? Have you driven around there? If you live in North Carolina where I do, and you're buying properties in Arkansas, do you have a trusted partner who's there to tell you that neighborhood is great, or you know what, that neighborhood is not as representative as what you see? How long would the deal actually take? We check to see your experience level. Not always, but sometimes new investors, they want to make sure every line item is just the best price. They're driving to Lowe's and Home Depot to make sure the paint color is the best, and if they can save $5 at one. And we want you to save money. But as you will see, professionals move forward. They build those strong partnerships, and really they realize that their deals are more profitable the quicker they can get through them, not because they always bid the lowest cost item. And then plan B. We paint the best picture. I see our management team on this call. I even show the management team the best possible scenario for this deal is an ARV of 525, like we discussed with Martin earlier. This one's definitely going to appraise herself for 525. I do that, and I work here. But I always back that up with what happens if it's not really 525? What happens if we thought our contractor, who was a longtime friend of ours, we didn't work well together, so now I had to go find another contractor? What happens if the market just gets slower? Properties that sold in 60 days now sell in 120 days. What is plan B? We want to see a plan right now, but we also want to see liquidity ready there. So you can afford payments. You are not spending everything to your name just to see a deal through. It's just not worth it. The stress of spending everything out, no, it's not worth it. We want to see you have margin in your business and in your lives. Know who you're borrowing from. So I give you a high level. There's a lot of lending options out there and a lot of good ones. Every time you open your computer or you go on your phone, especially if you've applied for a loan, you will hear from many lenders. Some of them are banks. Some of them are from brokers. Some of them are apps. You don't know who they are, but they are posing as something that says, click here to get qualified for your loan. Let me explain to you some of the main categories. You have private individuals. You might meet these people through real estate investment associations. Each major market has one, and especially if you're new, I would definitely encourage you to go to them. My RIA in North Carolina is great. There's seasoned people there, people from all different backgrounds, but that's where you can meet private individual lenders. They have extra cash. They want to lend it out and make 10, 12, 15%. But the two of you agree on that up front. It's very informal. We're the next step. We are direct lenders. So we're a company that lends our own capital. So if you get a loan from Central Lending, when we close, the wire comes from us. When you request a draw, it comes from Central Lending. When your payment is auto-debited out of your account, that comes from Central Lending as well. All interaction is with us, start to finish. And the reason people would do that is they want to keep the cost down. So just naturally having less people in the mix keeps your costs down. But also you want real decision makers. We built this company such that we could have the top of the company, our CEO, Andrew, our loan manager, Cheyenne, even the head of investments, Heather. She'll look at this and say, yeah, somebody will take this loan on from us. But we have many key decision makers looking at a loan. And that's very important to us. We always want to have the right people evaluating requests so we can give a quick yes or a quick no. We don't like to give no's, and I told you we don't give a lot, but maybe a quick suggestion of how we would do somebody's loan. You have other options in there as well. And again, we have some great mortgage brokers on here. The value they bring is they look to many lenders. We enjoy working with our brokers. We've done so much to our Milo site that's very broker friendly. We want you to be the star of the show. So if you haven't already checked out Milo, our origination software, definitely want to do that. Banks and credit unions, if you keep up with this for a long time, it will probably make sense for you to use banks and credit unions for a portfolio of properties. Properties that have been there for a long time, you can prove and season with cash flow from a tax return. But we fit right in that middle there, direct lender. And we think that's the best place to be because of the speed and also being able to repeat that for all your deals. Here's some of our products right now. Rates will be somewhere between 8 and 9%. We continue to offer better leverage. As we grow and as we become more well-established in the industry, we can offer better offerings as well as lower down payments. You get to pick your term. So you might prefer a shorter loan with a lower cost because you know you can get through quickly. You might prefer a longer loan. Give yourself the option to get through it. You'll even pay a little bit higher of an interest rate, but it's worth it to do the loan on your time. Max loan amount, we go up to $3 million. We've had a lot of success with funding deals in Florida and Texas that clear that 7-figure number. Also 1 to 10 unit residential loans. So we'll do units that are greater. The majority of capital is concentrated around that single family mark. It's very competitive, especially for high experience, high credit borrowers in major metro areas. As the unit size grow, there's less and less people who can offer that. We think a good deal is a good deal. If it's a 16-bedroom house in rural Tennessee, but the borrower is very experienced, they're well capitalized, and all signals are pointing to a successful sale or successful refinance, we'll do it. We love ground up construction as well. We do require experience, but notice that is experienced by somebody on your team. To build a house is a lot of work. So if you've never done one before, we want your contractor. And again, we would hope you would want that as well. But we do allow first timers to build new houses. These loans, we really take a look at what is the story? What is your experience? What's your budget like? And we build those based on that. But we will go as high as 90% loan to cost. It's best to buy your land ahead of time if you can. We can accommodate land purchases as well, but it's best if you already own your land. So we're going to wrap this up and then open up for any questions. The first essential is to know your own deal or know yourself. How much funds do you have? What is your ability to navigate credit? Anybody can pay a loan when times are good, but what is it like when times are tough? Who's a part of your team? But you need to know this best yourself before you start representing it to Central Lending and any other lenders you might use. The next one is the viability. That's not only a fancy calculation, although we think it's pretty cool, but it is the best gauge of will Martin, will Shalane, will Latoya have made a profit and a good profit. You're putting a lot of your hard-earned money, your precious time into this, maybe even nights and weekends, but is it viable? Will you be profitable for having given up this money and your time to do this? And then lastly, know your lender. Know who you are borrowing from. I hope all of you use Central Lending, but if you don't, I would love the chance to meet you. I'm going to put my contact information And even if you're very happy with your lender, I'd love to know why. We're always looking for ways to become more competitive. And we think we know a lot. We've done a lot of loans, but we don't know everything. So I would love to hear from somebody who's looking for a loan. I'd also love to hear from somebody who's done 100 loans with one of our competitors and couldn't be happier. You can see right there where you can submit a deal. You can also book a call with me, but we would love to hear from you. We left some time to go over any questions. So let me check in the chat to see what questions we have. Here's a question. What is the most common mistake you see from first-time borrowers when they submit their deal? I don't know if it's a mistake. I think it's just natural. It's pretty exciting to buy a house. And sometimes you can get a better deal if you can close quickly. So in the spirit of closing a property quickly, you might get them to write up a 2-week contract, but you have to make a lot of decisions in those 2 weeks. So you'd think you know how much you'd spend to fix it. You think central lending sounds pretty good, but you want to keep us honest. So you want to talk to a couple other lenders. You do that with your insurance person, the title person. So you are looking for 3 to 5 bids for as many of 5 different decision points, as many as 25 people you're interacting with. That's a lot to get through. You kind of have to pick a partner and trust them at least for your first deal. See how they execute. But yeah, I'd say for first timers, they haven't vetted everything they needed to, or they buy the house and they say, let me get in the house and let me really take a look around and see what I can fix. No, you want to have a budget set up from day one, have extra funds in case there's a liquidity, and also know if the scope of work makes sense for how much you're going to spend for the property. Might be able to get a better deal if you have a better price because you know that the work required is more. Good question. Is there a type of deal that borrowers assume we cannot finance, but we actually can? I think borrowers are surprised that we help first timers, we help first time flippers, we also help first time new build customers. In either case, we want to know that you've had somebody with experience on your team. Doesn't mean it's a hard no, but we just feel a lot better. Maybe you have a mentor or partner who's there to walk you through it and be a co-signer on the loan. Probably not a bad idea for your first loan. You disclose what the mentor relationship is like. You're paying them a certain amount of money to be with you on the deal. A question here from Marissa. What is our biggest difference between a borrower who closes fast and the one who gets stuck in underwriting? I think the person who has a fast closing, you give them a list of needs items, they give it to you right back. If there's an item they can collect, they're going to figure out a way to do it. If there's an item they cannot collect, they will let their account executive know or their processor know. Doesn't mean they're happy about everything. They might not see a reason for providing the sourcing of a deposit that happened last month, but they understand. And the borrower puts themselves in the lender's shoes. If somebody were to approach them for that $350,000 purchase loan that LaToya mentioned, if LaToya were to be asked for $350,000, she'd probably have a lot of questions. What are you going to do with my money? What is your plan to pay me back? So if they get that, if they have that mindset, they're great. Robert is asking, for someone who's considering their first fix and flip, where should they start before they ever call a lender? I would start on Zillow. Now, I said earlier, don't only rely on Zillow, but I would just look at Zillow. And there's a feature in there that says, how much have properties sold for recently? So don't look for the values. Don't look for even for the listing price. Just because I list a property for a lot of money doesn't mean I'll sell it for that much. But go to Zillow, find an area that you like, and get a real sense. What have multiple properties sold for? Not just one. What is the average price? You have to assume your project, although it's going to look awesome, it's going to be the best built. Will you be profitable if it sells for an average price? But you can tell that through Zillow. There's a lot of helpful public listing data sources. That's the one I'd start with. Will my deal make any money? Another question, what would you tell a broker who wants to submit clean deals and close fast with central lending? I think you give it a shot. Click on that submit your deal button and prove us. Are we responsive? Are we easy to work with? I think you give it a shot. I've heard that question rephrased, how quickly can I close? I've closed loans in a few days. I've closed loans in a few months. How strong is the file? How many of these documents we've spent the last 45 minutes discussing are readily available? But we do have smooth and clean closings. The first one, I think another thing that's good, especially for brokers to know, is people just need to get to know us. We need to get to know you. So not everything will we take your word on. We need to have it documented. So I think another element to that is repeat borrowers and repeat brokers, especially. There's a trust level. Doesn't mean that we don't trust them on their first deal, but they've proven themselves if they've paid us back. We can get repeat borrowers funded extremely easy. Another question here, is there anything about the origination process that people generally don't understand until they are already in underwriting? I think it goes back to the be upfront. When we ask people what's their credit score, tell us anything we should know about your credit, I think what they think is, what do I think you'll find out? Some of my best borrowers, from the first time I met them, they had a very transparent discussion how 20 years ago, they did not make the best decisions. Now they own businesses, they've raised their kids, they're a totally changed person. And their credit score, their bank account, their employment history, all that justifies it. But for some reason, nobody likes to talk about past accounts they didn't pay or past background events. Just be open. Be open. Let's see here. A few more questions have come in. Martin says he saw a slide that says 899 to 999. Is that accurate? Those are our loans. Those are our rates. If you go to Milo, click on that submit your deal loan, enter your deal, you get to pick. I can go as low as 899. I can charge 999. You could even go higher, lower your fee, maybe get a little more money. But yes, those are our rates today. And if you do a DSCR loan, which is a stabilized property, there's less risk to that. You're probably down in the 6s, maybe the 7s right now. Latoya asked, I may have missed it, what's the longest loan period for a first timer? Well, the longest loan for anybody, you could do a 30-year loan. 30-year loan. If you are fixing a property and you want a little extra time, you can go up to 18 months. It's totally your choice. You pay a little bit higher of a fee. But a 30-year loan, Latoya, for your fixed property, an 18-month loan for your property, that needs a little bit of work. You want to give yourself some time. It might be in a cold climate. You might need 2 winter or spring seasons to get through it. You can do that. Francine asked, do we have interest-only loans during rehab? I think you mean interest-only payments, and we do. All of our residential transition loans, our RTL loans, are interest-only. You pay your insurance when you close. You pay a lot of your taxes when you close as well, at least at the end of the year. We want you to have as many dollars in your pocket to successfully fix the property. So you pay your interest, you don't make principal payments, and then when you sell or refinance, you pay off your principal. But we like interest only, just like you do. Great questions. We got a smart bunch on today. I like that. Well, thank you all again for being a part of this. We will contact each of y'all with a summary of what we went over. I'd love to hear from you. It sounds like you all have some great ideas. I get more ideas. I get new things I can share with others. So even if it's not for a loan, I'd love to hear how you successfully do real estate. We do these webinars every month. Our next one is coming up on July 23rd for the capital raising team. So be sure to mark your calendars. You all had some great questions today. That's another reason why I enjoy these. Well, thank you all again. I'm Jason, and we will see you all at our next webinar. Have a good one.